Hello everybody, welcome to Monday Morning Must-Knows. My name is Merlin Rothfeld, and here are a few things to pay attention to for the upcoming trading week. Now, last week we had so many companies reporting earnings, a lot of speculation about where these markets may be headed, a lot of central bank announcements also talking about their interest rates. And you know what? There's a lot more of it happening, so let's get started. We'll kick things off with earnings. Now, last week we had like 900 companies reporting earnings. This week, it's much more. You have 1,511 companies reporting earnings. And here are some of the major names for you. On Monday, we start things off with Pacific Gas and Electric. We have Mosaic, and you have Clorox, so a broad representation of companies there. On Tuesday, we start things off with British Petroleum, Pfizer, Activision, Chesapeake Energy, Amgen, and ConocoPhillips. Wednesday brings you Roku, CVS, Qualcomm, Energy Transfer Partners, Etsy, Electronic Arts, and MetLife. Thursday, you've got Alibaba, Square, Cronus Labs, Duke Energy, and Skyworks. And Friday, you think it's going to be quiet? There's still some big names. You have Canopy Growth, Dominion, and Berkshire Hathaway. So quite a few companies in a lot of different sectors reporting. Uniquely, though, there's a lot of energy companies reporting this week, which will be interesting because of how we've seen XLE performing recently. Now, let's dive into the bigger, more moving pieces, right? We talked last week about some of the central bank rate announcements, and there were 3 of them that happened, which is exciting. But that's not the big one. The big daddy is the United States. So Chairman Powell of the FOMC will be making some announcements about where they see rates. And this is very important because on Wednesday at 2 p.m. Eastern Standard Time, they're expected to keep rates exactly where they're at 25 basis points. That's not the talk track. The talk track and the most interesting part, which should be the biggest market mover, will be at 2:30 Eastern Standard Time. Now, why is this important? It's the press conference, and Jerome Powell will probably talk about inflation. He'll talk about, maybe use this S word that a lot of people are talking about, which is stagflation, which would be very scary. Now, this is important to us whether you are an equities trader, a Forex trader, even an options or futures trader. It's great because there's so much movement potential. Why? Take a peek at the US dollar here. As you can see on this chart, the US dollar has been rising up recently, forming some higher lows and actually coming right into some overhead supply here recently. If we break that overhead supply right around 95, we could see this US dollar continue to move further and further to the upside, gaining strength. Now, of course, when we see the dollar move like this, it implies that people are optimistic about the dollar. Well, why would you be optimistic about the dollar when the Fed is just printing trillions and trillions of dollars? Why? Because that means that they are probably going to raise rates. And when they raise rates, the dollar becomes more attractive from the carry trade perspective. You earn more by holding US dollars if you are a currency trader. So the optimism that I'm seeing here reflected in the US dollar is implying that maybe not this meeting, but the talk track may be changing here going forward with regards to interest rates rising, and of course the tapering discussion, which will probably be laid out here on our Wednesday meeting, where they're going to say we're going to cut back on our mortgage-backed security purchases and we're going to cut back on our treasury purchases. So we will no longer be buying $120 billion a month. Maybe they scale that back to 110. That's my guess for the Wednesday announcement. Now, we move into the final piece here, which is looking at unemployment. Oh, yes, unemployment. Now, why did I bring this chart up here? Well, first, it looks great, right? We had that massive spike back in March and February of 2020, and we've been just slowly drifting down back to somewhat normal unemployment numbers right around 4.8%. Now, why did I bring up this chart? Well, because stagflation has been a topic of discussion lately. It's in the murmur category, but I think it's going to roar into a full-blown discussion here probably the next few months. Now, what is stagflation? The typical definition of stagflation is where you have slowing growth and increasing inflation. Unless you live in a rock in a forest somewhere, or under a rock in a forest somewhere, inflation is hitting all of us. Regardless of what numbers you're seeing, check the price at your stores, the gas pump, it's all going up. But is growth really declining? Well, we saw the GDP number decline last week, and it was a fairly sharp decline, although it has been trending upward. So we've got 1 point data that growth is starting to slow down. We have inflation high, and we have growth starting to slow. Ooh, is that the definition of stagflation? It is, but I think there's 2 other pieces that we want to look at. That's going to be earnings and unemployment. Now, typically in stagflation, you have earnings declining. We're not really seeing that right now. This last week, we had a lot of companies reporting. Over 900 companies reported earnings. Most of those are seeing earnings growth. There were certainly a few that were showing some earnings decline, but that's one factor to look at with regards to stagflation, so it's okay for now. The unemployment side of the equation is a factor as well. Typically during stagflation, we see unemployment rise. And if you look at this chart, it's not rising. It actually looks pretty good. So for now, we can push back the discussion of stagflation, but it is important to keep our eyes on those 4 variables. Let's look at growth like GDP. Let's look at inflation like consumer price index and PPI numbers. Let's look at earnings announcements as they are rolling out and see how these companies are performing. And finally, let's look at that unemployment rate. And if we start to see unemployment rise, earnings slow, growth slow, and inflation rise, then the S word rears up and we hear stagflation, which would be devastating to our financial markets. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.